So good afternoon, everybody. Thank you for joining our webinar. I'm Paul Wilton from Listed Financial, and I'm going to talk a little bit about innovation in anti-money laundering. Hopefully, I'm going to give you a little bit more of a practitioner's view of the world, some practical tips and some practical advice around some of the innovative technologies that are going on. So I'm just waiting for people to join the webinar as we speak. Just to kind of some points of order, I think everybody on the call is muted at the moment, but we have an hour, and hopefully we'll have time for Q&A at the end. So I'm happy for people to, if they want to ask a question, then you can put a note in the chat, and I can put you on. I can take you off mute, and you can speak at the end of the presentation, or you can just put your question in the chat, and I'll answer it. And I'm happy to keep it anonymous if you want. That's not a problem at all. So as I said, thanks for joining us. This is the first of one of our webinars, and we're going to be doing a series of them over the next few weeks or so, hopefully to give you some interesting content to keep you interested while you're so hopefully to keep you interested while you're in the COVID-19 lockdown. So I hope you're all safe somewhere locked away today, and I'll get started. So why are we talking about innovation in anti-money laundering? Well, clearly money laundering is a huge cost to the world's economies. I've seen this number, this 1.6 billion or trillion, actually. Sorry, that's actually a typo. So 1.6 trillion is the number that's been bandied around as being laundered annually. So I'm pretty sure that that's a best guesstimate by most of the authorities which have put this number out there. I don't know whether there's any substance to that number at all. It could be anywhere, north of that number. We don't really know. Safe to say it's a pretty large number. What is real, though, is the fines. So over the last 10 years or so, about £12 billion in fines for money laundering breaches, controls, sanctions breaches, etc. 2019, when I wrote this, was set to be a record year in terms of fines. I believe it was. So that continues to be a massive problem for the industry. That we're seeing over what we're seeing in the moment. And then the other massive cost to the industry is the amount spent on compliance. So traditionally, I think that most firms have hired people. I think that I've seen plenty of estimates in the industry about how much is being spent on AML compliance. Again, there's a lot of estimates and a lot of conjecture over what those numbers are. One piece of research that I saw was something like 12 billion being spent on AML compliance, and about 10 billion of that being spent on people and people costs. So that only leaves about 2 billion being spent on technology. So, although we think that there is a lot being spent on technology, this is still very much a people game at the moment. So I wanted to kind of kick you off with a little case study. So I think that I wanted to just show you this picture here. It's a end of terrace flat or end of terrace house in actually in Folkestone in Kent. I don't know if you know it. It's on the sea. Very pleasant place, and this small house here The analysis says there were about 4,315 businesses that were registered to this address. And of those, about 80% of them were listed in Companies House, as mentioned is in the Panama Papers. Turnover, £7.4 billion. So look at that terraced house. Have a think about those businesses that are registered there. Every one of those businesses had a UK bank account, and that meant that they would have passed the bank's KYC processes to be onboarded. They would have gone through any KYC refresh processes. So they were all, in theory, legitimate businesses. So this just gives you an example of how technology can help us in the fight for financial crime. We've been working with a company, Comply Global, using some of their technology in terms of their ability for screening. They've also done some really good work around refactoring the Companies House database. So they took all the Companies House data, they ran it through their AI engines. They were looking for connections. They were looking at geo-positional data. They were looking at addresses. They were looking at similar named people, directors, and all connected parties. And this is how they found this information. And this is just one example of many of these kind of, company factories as they're known. I believe that one of the directors that was linked to this address was also somebody who was signing off, thousands of accounts in Companies House as well. So really, really powerful example of how technology can help. And I'll talk a little bit about, some of the AI behind that and how that's helping in pulling some of this information together. And before I talk about that, though, I think one of the things I see as a practitioner is there's a lot of companies out there who are very interested in what's going on in technology, very interested in implementing new technologies in the fight for financial crime. But I think that my advice to a lot of these companies and a lot of projects that I've worked on over the years is that it's really about putting down the core components first. If I kind of think about just going back to basics and looking at what do we really need, what makes up a good solution in terms of an anti-money laundering program, right? And we've done quite a lot of research around this. We've done a lot of projects in this space, and we've come up with these core components. You may or may not agree with them. There may be others that you can add to this, but I think this is a fairly, decent set of components. First is the workflow orchestration, if you like. So how do you actually manage the process across your organization? How do you ensure all of the steps are followed in the process? So really kind of the backbone of the whole process, if you like. Some kind of regulatory intelligence tool, if you like. Some way that you can see the horizon scanning, look at what's coming down the pipe, what new regulations, what changes to regulation are happening, and what's the impact of that on your business and your process. Lots of people doing this traditionally, I think, on spreadsheets, Google searches, etc. There are some tools out there which are helping bring together that information. But anything really that helps you understand, what's coming down the pipe in terms of the regulations. Clearly, the knowing your client, is the kind of first part of this process. So understanding your KYC profile, and how do you evidence that? So where's all your information, and where do you store it? So data storage is really important. I talk a lot about regulators and how they like a lot of evidence of what you've done. And this is clearly about accountability, and showing, what processes that you followed, and having it fully auditable, a full audit trail, and full accountability of that information. And then there's the risk assessment. So what tools are you using? How are you doing your risk assessment? How is all of your information feeding into the risk assessment tool? What factors are you putting into your risk assessment tool as well? We've done a number of pieces of work for clients around risk assessment and looking at their risk appetites, looking at their and the way that they risk assess their clients, and clearly that's a key component to any AML program. Clearly your screening tools and your sources. So where is your, what are you using to do your screening? How are you doing your screening? What are the data sources? I think that a lot of people are, when I talk to people, I think that there's a view that, if you're paying for the data, then it must be good data. Not necessarily the case. Check your data sources, look at where they're coming from. There's a lot of reselling of data in this space. So a lot of vendors resell other people's data. So check what the source of that data is, where's it coming from, how much are you taking from public sources, how much is coming from other sources. So I think that's all really important. Clearly the identification and verification, so both from an individual perspective, but most of what we do is the company profiling. So looking at complex, company ownership structures, what's the ultimate beneficial ownership resolution, if you like, and how do you get to that? So what tooling are you using? How are you able to pick up, how are you able to build up that picture? How are you able to evidence that picture? And, what information goes into that? Your client communications are really important. So how are you communicating with your clients? How are you getting documents from your clients? Whether that be, some kind of portal, but traditionally, a lot of that communication is via email. Is that the safest way of communicating that information? How do you validate that information? How do you ensure it's secure? How do you ensure that you protect the data on those communications as well? Again, there are lots of areas where technology is helping on the client communications in terms of the data transfer and understanding the data. I've seen some really good tools around converting emails, for example, into actionable items. So rather than spending a huge amount of time reading emails, then you can get technology to do that for you. So that's quite an interesting use of, artificial intelligence. We'll talk a little about that in a sec. Management information. So this is the kind of, I think, the long overlooked part of any AML program. I think, in a lot of clients, we see management information being, often in a bare minimum format, but also very manually produced. So lots of information being fed into, often a person who is pulling that information together, typing it into spreadsheets, typing it into a database, and then producing, kind of PowerPoints, reams of PowerPoints, with information that's being circulated around the information. I think that this is another area that we're spending a lot of time talking to clients, developing tools. How you manage your whole process, how you manage your KYC process, how you manage your AML compliance program is really important. How do you ensure that the right information is being distributed to the right people in the organization? Is everybody seeing the same version of the truth? Validating that information. It's another thing that I've seen in the past. How are you understanding your risk? What's the risk in the management information that you are distributing? I think back to my time of working in banks, and a lot of, again, the danger of manually produced management information is over the years, somebody does the task over and over again, not understanding what the data is that's going into it. And then only, a while later do you find that key pieces of information are missing, key pieces of information are being misrepresented. So that's a key risk for organisations, and something that should be taken really seriously. Clearly, the transaction monitoring. So how are you doing your transaction monitoring? What are the typologies that you're using? What are the systems you're using, and how are you managing your cases? How are you working through each of your cases? How is that linking to your SARS process? And again, linking that back into your KYC process. Something that we don't see happen a lot is people bringing their KYC profiles and their transaction monitoring process together. I think they should be very much linked together. They're very much side-by-side processes, so really important that those two things work in complete harmony in the organisation. I think typically in banks, one of them will sit in one part of an organisation, and the KYC process will sit in another part of the organisation, and that's really important that those areas are very well connected. And then finally, just thinking about other regulatory services. So what other regulations are you looking at when you're onboarding a client? How do you bring in all of your, things like FATCA and MiFID and classifications, Dodd-Frank, etc. How do you make sure that that's all fed into your process for your client onboarding and your ongoing monitoring? So I think it's a case of, really kind of orchestrating this whole process together, making sure all of the pieces, work together. I think one of the things that we do see is that there are lots of systems out there which claim to do all of this. And, I would say buyer beware in that case, because, I think it's all about finding the right tools for the right job, and bringing those together. And I think that we're going to do a separate session around collaboration in technology, and I think it's really important that lots of these systems talk to each other, that they integrate with each other, and I think that that's the key to really making this work in an organisation, is how each of these moving parts relates to each other. But this diagram just isn't really complete without two kind of major pieces. I think when I put this diagram together first, I used to call it the AML sandwich. Clearly the sandwich isn't complete without the slices of bread. So at the top, I've put the policy, governance and controls. Clearly that's one of the key overarching factors in this whole process. So making sure that you have your policies lined up with everything that you're doing. Where are you storing that? I've seen some interesting tools around policy management, and and how that links into all of your processes and your controls and your systems. Managing your governance. How are you doing this? How are you managing this process? What are your regular checkpoints? What's being reported upwards? What's being reported to the board? Very importantly, in terms of the responsibilities of the board related to AML. And then the controls around that. So what are your controls? How are you managing those controls? And I think this piece is really important with the senior managers regime coming into play. How MLROs are having to deal with consequences of their actions. How can they see what are reasonable steps? How do they manage that? Clearly the management information is a big part of that. But just looking at the overall picture, and how it all fits together. It's not just about looking at one one factor or one small set of factors. It's not just looking at your risk profile of your clients, for example. It's not about looking at your backlog of your KYC files or your number of, you know, transaction monitoring cases that haven't been actioned, or a number of SARs. It's, you know, it's a combination of all of these things working together. And then finally, this will become a theme as we go through this, but very much your data. So I think that, you know, falls into a number of categories. So firstly, your internal data. So how does your internal data flow through this process? How do you ensure that your client data maps to your transaction data? How does your transaction data manage to your product data? How does every single piece of internal data, so across from one entity to another, from one branch to another, from one department to another, and from one system to another. So how does that all interact, and how do you ensure that, you know, everything is working together? And then add on to that to the external data. So all of your data sources coming from outside of your organization. Are all your watch lists correct? Are your sanctions, you know, lists correct? Are you picking up all of the latest information? You know, where are your data sources coming from? You know, what's the source of your data? So the original source of your data, not just the vendor that's providing it, but where are they getting the data from? And then also marrying that external data with the internal data, and making sure that it's all working correctly. You know, I think, again, you know, in my career, in working in operations, you know, all of my major risk events and risk issues have all come down to management of data, and data either being translated incorrectly, being transferred incorrectly from one place to another, you know, data being changed or data being transformed. That's the other thing. So when it moves from one place to another, often we do things with the actual underlying data, and it's that transformation process which then turns it into something which is you know, either unusable, or, you know, can get ignored, or is not driving your process correctly. So I think that's you know, it's a really key point, and, you know, we'll kind of come back to that. So let's talk a little bit about some of the innovation in AML, and you probably would have heard a lot of the buzzwords that I'm about to kind of go through. But I just wanted to just give you a little bit of an overview of where I see some of the innovation happening, and what's, you know, kind of maybe debunk some of the kind of technology, you know, kind of things that people are talking about. So where did this all start? So I think it was the development of cloud computing, which has really enabled some of this innovation to happen. It's really been a driver. Cloud computing has allowed, you know, larger data sets to be processed much more, you know, cheaply. Allowed you know, much more processing power, particularly for smaller organizations, you know, to be able to scale up, scale down, and really, you know, enhance the power of big data. And then that's driven the ability to use artificial intelligence, for example. So artificial intelligence, you know, covers a multitude of sins. You know, I think the things that we tend to see really in financial services are machine learning. So machine learning algorithms that can be both, you know, kind of supervised learning or unsupervised learning, depending on the you know, what type of action or what type of, you know, process it's working on. And then we see natural language processing, so the ability to understand language, the ability to understand context, and be able to process from there. You know, you also see OCR, so being able to read things that are picture-like as well, and understand them and be able to process them. We've also seen some big advances, and very much in the last few years, around distributed ledger technology. So more commonly known as blockchain, but I put blockchain as a subdivision of DLT, just to be on the kind of technical side. Blockchain may be the answer, it may not be. There's lots of use cases for blockchain in the AML world that I'm seeing. Whether it is the answer or not, I don't know. There seems to be an ongoing debate over the kind of data privacy argument versus the ability to share information anonymously, and then there's the kind of provenance and that whole kind of right to be forgotten, if you like, that blockchain doesn't really allow for. Not that becomes an issue with AML, because obviously AML tends to trump privacy rules and GDPR, for example. But obviously you've seen a rise of cryptocurrencies and crypto exchanges. Clearly there are slightly different angle in terms of AML compliance. Are they a positive influence? Are they a negative influence? I did read somewhere that the estimate of amount of money that was being traded in cryptocurrencies that was related to financial crime was so tiny as it not even to register as a rounding error on the overall amount that was being laundered. But who knows? Again, I don't know where those estimates are coming from. So that's an interesting one, and kind of a watching brief, if you like. We've seen some advances in robotic process automation, so RPA. I think that's been quite useful in automation of manual tasks, some of the workflow automation that we've seen in organizations, some streamlining of processes. I would kind of warn users around RPA. I think RPA, as a colleague of mine once told me, he thought it was the sticking plaster of technology. It's very much, solves a problem point to point. So doing things like screen scraping of information, which could be useful if you're getting information around public data sources or information from the web, from some of the UBO registries or something like that. The problem with it is it doesn't, there's no learning capability. So it's very flat. If you change a URL that it's taking information from, that it won't adapt. So then that can break your process without you knowing. I think it's a short-term fix. And I think, where I've seen really good use cases of RPA have been fixing a problem in the short term while you look at what the underlying issues are and are waiting for a kind of longer term fix. Again, when I was working in banking, we had this whole thing of people running grey apps on their desks. So running macros on Excels that people relied on and were behest to. That person took a holiday. The Excel macro fell down. We couldn't process our reconciliations or whatever was running on it for 2 weeks while they were away, and that caused us some major issues. So I think RPA has that kind of risk attached to it, that one small change in the process can actually bring the whole thing down. So just worth looking into, but I'm not sure it's going to solve all of your problems. Clearly, we've seen a rise in biometrics. I think you've all seen that, right? Most of you have phones now that you can open with your face or your fingerprint. Clearly, there's an authentication If you open a bank account with one of the challenger banks now, you'll be asked for a selfie. If they're advanced, they'll ask you for a moving video of yourself with your passport to prove that there is actually a human at the other end. So there's been some really big advances here, and I think it's certainly helping in the retail space. Whether it's, whether there's some use cases in the corporate world and with corporate onboarding, I don't know. But yeah, I think there's some interesting developments here, and definitely something that is making things a lot more straight through and a lot more seamless for some of the retail organisations and wealth, if you like. So we were dealing directly with individuals. And then I tagged on the end here, my original document didn't have this on, but increasingly we're starting to see some developments in the privacy enhancing technologies, or PETs, as they're being known. So this allows data sharing while maintaining privacy. They came to my attention back in last summer. So the FCA's second AML tech sprint, they did quite a lot of work looking at privacy technologies and how they could help in the fight of financial crime. I think that early stages, but looking pretty hopeful. I did notice the other day that a company called Privitar, I don't know if you know them, they're a RegTech company, had a large investment. So clearly it's kind of quite a hot area at the moment. I think that, one of the big problems in AML is sharing data across border. And that's been one of the big failings that has been pointed out by, even within the EU. But again, cross-border between different government organisations, but also different commercial organisations, and their reluctance to share data, and for obvious reasons, due to data privacy laws, due to data privacy amongst their clients, and this may be an area which which will help enhance that in the future and make that easier to do. I think a lot of firms are finding they're using some of these technologies to share data cross-border within their organisations. So hopefully, we'll see some development outside of that and some cross-border collaboration as a result of that. So I've just put together a couple of use cases here where I am seeing the innovation coming to the fore, and I'm actually seeing some real live examples of where technology is really helping in terms of improving processes and increasing compliance. So the first one of these is in the area of the ultimate beneficial ownership, resolution and screening. So the example that I showed you, the case study I showed you earlier that came from Comply Global, I think there are a number of companies that are increasingly using AI, big data analytics, machine learning algorithms to connect data sources together. So pulling in information that is related to each other, network analysis on individuals and companies, identification of bad actors, and how those individuals are connected. So not necessarily somebody that has had some adverse media on them, but somebody who might be connected to somebody that had adverse media on them. And looking into those kind of enhanced due diligence areas particularly, we're really starting to dig into that information. And as I said, the Comply Global example is where a bunch of data has been pulled together, and linkages have been made, and one of those companies, for example, at that registered address in Folkestone, would probably not be suspicious on its own, but having 4,500 of them certainly does make it suspicious, and it makes all of them suspicious. So, I think it's the power of managing that big data and being able to search through those through all of that data and find those things. The second one is transaction monitoring, and this is an area which is very, very kind of close to my heart, because I've spent the last year or so working with a client on implementing a system for them which employs some artificial intelligence to help in the transaction monitoring process. So I think transaction monitoring traditionally was carried out by what I would call the reassuringly expensive, large, monolithic systems. And now I see there's a lot more of an agile approach to this. It's all about analysing large data sets. It's about creating a set of rules, but then understanding cases that are outside of those rules. So, again, most of the typologies in transaction monitoring systems are, pretty straightforward in terms of looking for, unusual transactions. And I think that most of the financial criminals who are advanced understand how those systems work and how those rule-based systems work. What you're seeing is that that some of the newer technologies are able to identify patterns. They're able to identify anomalies in patterns over large periods of time. So actually look back over data, really analyze the data, and actually learn from the data itself. So once they've done that, it's also able to then learn from the operator. So it's enhancing the operator in terms of they're able to look into a case which has been raised, and then it will learn what the outcome of that case is, and be able to improve the process around transaction monitoring. So, really, really interesting use case. Certainly seen that in action, and seen that, firsthand. And I think that that's definitely, we're starting to see a lot more of that in the transaction monitoring space. So just a brief, just kind of view of where the regulators are on this. I'll talk a little about the FCA first. So I think the first thing that the regulators, the FCA did was they really started to engage with RegTech. They have a head of innovations in the FCA now. They have a head of RegTech. There are a number of forums in which you can engage with the FCA about regulatory technology, about innovative technology, and they're really starting to be at the forefront of this. So you can definitely see that engagement happening. They started the regulatory sandbox process, a number of years ago. There are a number of technologies that have gone through the sandbox. How successful has that been really in improving new technologies, improving out that use cases? I don't know. It's been I think it's been quite a controversial program, the sandbox program, but definitely I think there's some benefits that have come out of it. And then they've also been running the tech sprints. So I think they're up to about 8 now, I think 7 or 8. They've done 2 tech sprints on anti-money laundering specifically. The first one was a very short tech sprint. It was just a few days. The second one was a little bit longer and involved a number of kind of other regulators. So it was the first tech sprint that involved regulators outside of the UK. And as I said, a lot of it focused on, privacy technologies and sharing of data across border. So there was some really good stuff. There's some really good information on the FCA website. Happy to share the links with you. In terms of what the tech sprints were. There's a bunch of follow-up sessions that they've held. They're pretty good and transparent about sharing the work of the tech sprints. So there's some really good information in there. The ESMA also published a paper back in 2018, which was around the innovative solutions in the customer due diligence process. So it's not a particularly long paper. There's some really good information in there. It does talk, there's some good advice in that paper in terms of implementing innovative technology and how you would implement it. It talks a lot about testing. It talks a lot about understanding what the technology is doing. And I think it really puts the onus on the compliance professionals to really understand the technology. So one of the takeaways that I took from that was the changing of the skill sets that compliance professionals really starting to need going forward. I was at an interesting seminar where one of the heads of compliance technology, one of the challenger banks, who will remain nameless, said they thought it was easier to train technologists in compliance than it was to train a compliance professional in technology. I'm not so sure it's necessarily that way around, but I think somewhere in the middle is probably what we're looking for. So, I think definitely the changing skill sets and attitudes is something that they really started to bring to the fore. So just some kind of practical advice of what I've seen over implementing systems, at regulated institutions. So when you look at the RegTech world, there is lots of choice, but with lots of choice comes lots of opportunity. So I think don't be overwhelmed by the choice. Unfortunately, there is a lot, but I think it's about ensuring that you understand what your requirements are, you're clear about your requirements, and you have a really good set of understanding of what the problem is that you're trying to solve. And then when you do that, then I think that you can narrow the choice down quite a lot. So, it's the last time I looked, I think there were about 450 solutions in AML, so all tackling different parts of the problem. I think, the due diligence is really important, right? So, as I said, don't always believe the hype, but sometimes you can believe the hype. Sometimes, what these systems are claiming to do is actually real. And I think when you peel back the layers and you actually test this stuff out, then you will see that they are, there's some really good solutions out there. But I think before you do that, then I think, back to my AML sandwich, just remember the AML sandwich, when you really want to put the building blocks in place, what's your strategy? So what's the vision? How do you want to be, at the top end of your, technology, kind of implementation? Do you want to be as technologically advanced as you can? Do you want to look at being the most efficient? What's the vision? How do you want your AML compliance program to work? And then at the next level, what's your target operating model? So where do you want people to be? Where are they going to be located? What are they going to be doing? how much of it is going to be done in certain locations. Think about all of the elements of your target operating model, people, process, technology, data. Think about the regulations, what's coming up, and data. So, important part of that is, where's your data coming from? What state is your data in at the moment? What are you going to do to get it into, into the state that you want it? And then from that, build your roadmap. So what does that roadmap look like? So what solutions are you going to put in where? What makes logical sense? Don't try, and some people just kind of throw everything out and start again. There's obviously a lot of things which are probably still fit for purpose. So think about what those are. Think about what the transition is going to look like. We're working with a client on the moment on a big implementation of a CLM program. And a big part of that is going through these steps, right? They kind of got about a year in, and we're now kind of redefining their operating model. We're looking at their policies and their standards, and we're really trying to help them then decide, what are the building blocks that they need to put in place to be successful. There is no silver bullet. I have not seen a system or a solution out there that solves all of those problems. So you need to think about bringing different solutions together. That may be a bespoke architecture, which is the best fit for you, right? So different firms, different sizes, different organizations, different cultures. So what makes sense? Some of it might be built, some of it may be bought. You may choose to build the whole thing. Not sure why you would want to do that with all of the good solutions that are out there, but it's about fitting them together. And as I said, I think collaboration is the key here. And, I think we're going to do a separate kind of session talking about that, about how different vendors can collaborate together to get a really good outcome. And then think about the culture change that goes with that, right? So when you bring in new technologies, you bring in innovative technology, what you bring with it is agile working practices. You need to get people trained on the technology. People need to understand what the technology does. You need to make sure there is awareness across the firm of what these things are doing and how they all fit together. So, I think ignorance is not a defense. We've known that for years in compliance. And it's the same for the technology. You've got to understand what the technology is doing, because if you don't understand it, you can't explain it to a regulator. And then think about the regulatory change. So what's coming up? What have you still got to do? Think about your policy, how that's all linked in together, and how that's going to impact all of this, right? So think about, what's coming up. Don't build something that you're going to have to rip apart again, in a year's time or whatever. Think about the longevity. And then finally, it's all about the data. If I haven't said data enough, then I'll say it again. But really, really important that you get that right. Just think about how are you going to bring that all together, make sure that you've got all the moving parts, and just how it fits into the whole strategy. So and that pretty much wraps it up. So I'm just going to have a look on here and see if people have any questions. So I will just have a look on here. So okay, so I've got a question on here that says, how do you think the lockdown will affect transaction monitoring alerts and the management of alerts, reprofiling, etc.? So good question. So just I'm glad somebody brought the lockdown up. So we've we're a company now who are supporting a number of financial services firms. We are 100% working from home. We're all remote workers at the moment. Pretty much from day one of the lockdown, All of our people were able to work from home. Our IT guy worked day and night to make sure that everybody had all the tools in place and the ability to log on. We've got some clients who didn't go, complete work from home from day one, but, we had the ability to do that. We manage, one of our clients, we manage their transaction monitoring for them. Interestingly, in terms of their business, the number of transactions has gone down quite significantly. I was talking about this the other day, though, in the fact that I think obviously there's a lot of banks, you'll have seen a massive increase in transactions. The markets have been pretty volatile. There's been a lot more business. I think looking at, if you're looking for unusual patterns, particularly in volume, for example, of transactions, that's going to be at a spike at the moment. I think that there's going to be a lot more potential activity. We were talking about fraudulent activity the other day. I've noticed a lot more kind of, phishing emails and things like that. So, wherever there's an opportunity with this type of environment, there's an opportunity for financial crime. So I think there's definitely, it's an interesting time for everybody. Whether this becomes the new normal or not, we'll have to wait and see. But it certainly opens, new avenues. I think that it is, people do have to be more alert, I think, in terms of their in terms of what they're looking at. And just kind of just be aware of the dangers and aware of the risks. And the other thing, in a remote environment, is making sure that everybody's got the data. Having transparency and having good MI in this situation is absolutely critical. To be able to manage these processes is critical. To be able to look at what's happening in your business and see that on a day-to-day basis is really, really important in this remote environment. So, it's really, really key. So just having a look on the chat. So what other questions do we have? So will the slides be available after this? Yes, I'm happy to package them up into a PDF, and we can send them out to everybody who attended the webinar. Annual figures generally considered to be between 3 and 5% of global GDP. So thanks for that. That's the I'm assuming that's the money laundering. What's laundered at the moment, 3 and 5%. I mean, that's, again, I still not sure how anybody actually works out that number, but yeah, it seems completely reasonable. And then I've got one here regarding COVID-19. Have you witnessed dramatic change within the FinCrime RegTech environment? I don't think I've seen a dramatic change. I think what has been interesting, I've spoken to a number of RegTech vendors, and they have seen, they've been busy. I can tell you that. So I think there's a lot of people. I think there's two sides to this. There's definitely a renewed interest in technology and how technology can help, because clearly when you're working in a remote environment, technology is very much a key to what you're doing. Clearly, AML is a compliance program, and compliance programs have to continue. So that's important. I think that the FCA has been absolutely, crystal clear on people having, robust BCP plans, and having, they wrote their resilience paper last year, and, they've really kind of stuck to their guns on, BCP being, this is why people have BCP plans, so that, they can deal with these situations. So they've been there's some leniency on some of the regulations, but AML has not been one of them. So I think it's been very, very clear that this is an area of kind of heightened risk, not of relaxing any of the rules. I think the RegTechs are kind of in that situation where if they're in a process with a firm, then I think it's probably the getting accelerated, or they're having to work out how to do a lot of their work remotely. What we're seeing is perhaps a slowdown in non-essential type projects in banks, but that doesn't include compliance. So I think that I think there's a positive. I think it will be interesting to see what happens in the kind of fintech world, as and when as the economy suffers, and the liquidity issues kind of kick in, and how companies survive that. So that'll be interesting to see. But yeah, that's probably what I've seen so far. And then I've got another question here saying, what role does reliance on regulated entities now play in light of reg versus tech change? Not sure I understand that question. I'm just wondering whether I can unmute you so that you can ask me, so that everybody can actually hear the question. Give me 1 second. If I can actually do this. So so Andrew, I think it was you who asked that question. Can you just clarify the question? I think you're off mute now. Maybe not. Unmute. There we are. Andrew, can you hear me? I can't hear you, so I'm not sure what I can do. Okay. All right, well, I can't. Okay, so I'm not sure. I was trying to get, so there was somebody else who raised their hand. Was that you, Mo? Okay. Mo, can you hear me? Can you speak now?
Sorry, hi Paul. I raised my hand.
You, Mo. That's nice to know there's somebody on the other end.
Likewise.
Did you want to say something?
Yeah, just in terms of, obviously, I think it was in the beginning, I just raised my hand just to test out the actual Zoom, but I just wanted to find out, obviously, with the money laundering, where you kind of got the data from, the 1.6 billion, sorry, in terms of how the money was obviously laundered.
Yeah, it's one of those figures that's been kind of banded around. It's been used in a number of different sources. I think it came from one of the official, it may have been the US government or one of those agencies, in terms of the original estimate. But like I said, there are various estimates banded around in terms of the total of money that's laundered.
The figure, the bandied about figure, is from the IMF.
Yeah.
Okay, and it's obviously a guesstimate, and perhaps it's too big a question now. I think it's just a marvelous presentation, but I think when we're talking about what the technology can do, I wonder what happens when, for instance, thinking of something simple like beneficial ownership. It's been reported by the Commission. First of all, not just looking at EU, not all EU 28 member states are compliant. Some are not compliant because they've just done nothing. And some are not compliant because what technology would do would be to hit a barrier. For instance, the payment of a fee, or a non-tariff barrier. You have to be someone with a legitimate interest. So I think that technology is a fabulous enabler, but I think there are lots of regulatory barriers to having that kind of all-seeing access to the data.
No, absolutely. It's a really good point, Cameron. Definitely. Okay. All right. Well, thanks for that. And just in the interest of time, I'm going to wrap it up. If anybody had any other questions that they didn't get to ask, or any other comments, then feel free to drop me an email. If you don't have my email directly, then you can contact me on LinkedIn. We're on the KYC and AML Leaders Group. I think that's who this was organised through. Happy to post something on there. We can have a discussion on there. You can send me a direct request, or you can visit our website and hit the contact us button, and that will come through to me as well. So thank you very much for your time, everybody, and have a great day.